Good morning, everyone. This is Anne Marie, and today is Thursday, November the 8th, 2012, and this is the SPY Outlook for work ahead. Well, as I mentioned in the afternoon recap yesterday, we did come into these support levels, and we've got these three regions that may or may not be of consequence today. My thought is, since we've come into this region, it is a very important fib level that a lot of people take a look at, and so I would surmise that bounce action should be afoot. Now, in the pre-market, we've had stable movement, and as a matter of fact, the moves have been probably less than 6 points since the day closed, and that's really just not certainly like the days of old where we could have 3-point overnights, but this overnight is about 6 points wide, and so it's relatively tight, and we are holding support regions. So what we need to look for again is how much juice does the market have to move. And if we take a look at the 4-hour charts, again, we can see this stable CCI action. It's just really steep and staying negative. If we take a look maybe at the 1-hour, well, yeah, I always forget I had these great tabs here. Charts are from Motive Wave, and it's a great piece of software. It's got a lot of superb features, and certainly if you like Fibonacci's, or particularly those of you who are keen on Elliott Wave, these are the Elliott Wave guys. So that being said, let's take a look at this. We can see the move up, the pull back into support, but making higher lows, and so that's what we're going to look at. The breach of the region is always going to help us with continuation. Now, the rule of thumb for us as traders here in the very technical system that we run, we trade the retest of support lines that have been broken or the retest of resistance lines that have been broken, except for a few certain spaces that traditionally we have to do something else for. We will chase the run to the outside. But this is a market that consistently retraces. It's got very low momentum, and so it retraces very, very steeply. That's a high level of reliability for retracement. And so if we are patient, waiting for the pullback and allow the chart to retrace, gives us a much higher probability trade, one that will not likely break down on us as the one that we just taking the break. That being said, we're in a region where taking the break will shove us into certain levels. We want to see how we do up at 141.10, 141.65. Those are going to be the lines in the sand. If we cannot get into the gap, we are going to move lower. We're going to have to look at 137.95 as the next space for us to enter. At least that's my thought. Or what we could end up having is this kind of formation only down here. And again, that does telegraph the likelihood of a move into this level. Ultimately, you know that a 61.8 retracement is on the horizon, so we'll be watching out for that. Now, it would be very nice if we started our, holiday rally, as it were, right about now, and shove this up into these higher regions so that we could feel, a little comfier around the end of the year. But we shall see, right? Watch for the breaks. The loss of 139.70 is going to bring in 139 into view, right? And use the lower lows and the lower highs, or the higher lows and the higher highs, to help you determine the trend that you're sitting in. Good luck today.